Right, okay, I think that I'd make it around about 12:30 now, so what I'll do is I'll start the webinar this afternoon. So thank you first of all for attending this afternoon. Good to see so many people here. As mentioned, I'm Gurpal. I'll be sort of hosting this afternoon session. My colleague Zane's off at a wedding this afternoon, so lucky him. But I'll be trying to go through hopefully some useful facets of our trading webinar today. Right, today, what we're covering today, so we'll be looking at MACD. It's a sort of an indicator we've not covered for quite a while now, and I do sometimes get a lot of people ask me about different sorts of indicators, and MACD is one of these one that always crops up. I've just not managed to sort of get around to it, but I thought we'll cover some of the basics of the MACD indicator. If we get a bit of time, we'll look at some of the current charts. I know looking at some of these markets flying about, I'm sure you're enjoying the volatility, but we'll see what we can make of those, and we'll be sort of touching up on the platform that we're currently using, and obviously we'll take it from there. Right. Just before we sort of get onto the main part of the webinar, just a small bit about ourselves. I know most of you already know who we are. 2A Markets. We've been established since 2003. We're fully UK regulated and authorised by the FCA, and what we tend to do here is we tend to give as much support and help to sort of fellow traders as we can. We have an unbiased view of what sort of platforms are out there. We've got a select few that we do introduce people to. Certain ones we do feel that are very good, value for money. We tend to look at easy to use platforms, obviously offering the best spreads, and what we try to do is certainly give you a bit more of a one-to-one approach to trading. With a lot of brokerages, they just don't have time to sort of cater for people's individual needs, so we try to fill that gap there. Obviously, with webinars like today, we try to give you a small bit of education along the way. But let's move on to the main subject. So the MACD, moving average convergence and divergence. I'm sure most of you have come across this. Some of you even probably use it. But let me introduce you to the MACD indicator. So the MACD indicator is a trend momentum indicator that basically is a refinement of two moving averages and measures the distance between these two particular moving average lines. I'll get to that in a bit. But MACD, as you can see on the screen, stands for moving average convergence and divergence. It was established in the 70s by a gentleman called Gerald Appel. It has been very, very popular because it's one of the most reliable and easy to use technical indicators. Even though it's a lagging indicator, it can provide a signal before actual moving averages have crossed over. So MACD significantly gives you trend continuation and reversal. Therefore, equally it can be used by bulls and bears, so those who are trading up or down. Okay, and basically this is what the MACD looks like for those of you who have never come across it. I want to go across what the calculation is all about currently at the minute. So the MACD calculation is performed by taking the difference between a fast EMA, so an EMA is an exponential moving average. I won't be saying that throughout the webinar. An EMA is basically the exponential moving average, and the slow EMA. And this value is plotted on a graph, and it can be calculated on any time frame. The third EMA, so there is a third line, is the first derivative of the moving average convergence divergence indicator. This third EMA is also known as the signal line. It takes the exponential moving average of the MACD values which have been generated in prior periods. So most charting applications will plot the MACD and the signal line together. It will allow traders visually to see crosses without. So if I could just quickly show you back here. So there's the 12 moving average minus the 26 moving average, and you've also got a zero line here. So I'm going to which is also known as a signal line. So let me just move across further here. So let's look at some of these components. So any two EMAs can be used to calculate the MACD, but the most popular and the default ones are the 26 and the 12 EMA. So often beginners have difficulty understanding and utilizing the MACD because it can look a bit complicated and intimidating at first. But once you take the MACD apart, you'll realize that it's a fairly basic indicator and it's easy to understand. So once you familiarize yourself with it, the MACD turns into a two trend following indicators. So moving averages into momentum oscillator by subtracting the longer moving average, as mentioned earlier, by the shorter moving average. As a result, the MACD offers the best for both worlds, so trend following and momentum. So the first thing you should learn is the basic components that make up the MACD. You need to become familiar with these components so the MACD graph obviously makes sense to you. The MACD is made up of the three components. So if you look at the chart here, let me move on here. Actually, let's probably move on this one here. This chart shows you exactly where each of the three components are located, so that you can obviously start to see how the MACD is integrated together. The first line in the MACD and its form is subtracting the 12 by the 26. So the 12 and the 26 is a multiple of the subtraction of the two lines, right? And the second line is basically is a simple 9-bar EMA of the MACD line. So the purpose of this line is to smooth out any ups and downs of the MACD line. Firstly, the last and the most visual part, finally, the last and the most visual part of the MACD are these bars here, which we call histograms. Histograms simply are the difference between the MACD line, this one, and the signal line. So obviously the difference between these two lines are also plotted on a histogram. So if you look at this one here, so at the top here we've got price action. At the bottom we've got the 9-bar and the 26-bar EMA here, and the MACD line. The 0 line here is very important also, and we've got the MACD. So here it shows you, obviously, as I mentioned, the difference between the two lines are plotted within the histogram, and we'll go through how price patterns affect the MACD and how it sort of twists in and out. But the first thing you need to pay attention is to the MACD line, and this is the main component of the MACD. So if you look at the MACD line here, this is the core leader of the of this sort of indicator, and most of the pricing structure and most of the histograms are fixed around the MACD. So obviously, when you see a volatile market, you want to try to keep most of the noise out, market noise out. So the MACD line generally smooths a lot of this component out. So the three separate scenarios on this chart I want you to see is the fast and slow moving average come together on the support upper part of the chart of the MACD is exactly at the 0 line. So so when you see a crossover here, you can see the 0 line on the actual histogram here. Likewise here, you can see the crossover here on the 0 line. Again, histograms is showing 0. These are key features. These are areas you need to sort of understand. So when there is a crossover, the 0 line goes to 0. Obviously, above the 0 line, you can say that we're very much sort of in a bullish run, upward move. Below the 0 line, we're very much in a selling zone. So if we have a look at some of these crossovers here, so the three scenarios here, if you have a look at here, if you notice the fast and the slow moving average come together in the upper part here. of the chart, and the MACD is exactly at 0. The MACD is just a difference, as I mentioned. So basically, when there is no difference, that is a point of where you as an individual would potentially take a view on how you want to trade this market. So signal line crossovers. So if I move over to the next slide, these are signal line crossovers. So once we see a crossover, one of the most basic MACD trading methods is a signal line crossover. So the method tends to work well with volatile markets that trend often. The signal line, as mentioned earlier, is a 9-day EMA of the MACD, and as a moving average of the indicator, it slowly follows the MACD. A bullish crossover occurs when the MACD turns up and crosses above the signal line. A bearish crossover occurs when the MACD crosses down and below the signal line. So once the crossover occurs, you want to make sure both lines gain as much distance apart from each other as possible. This is a good sign that the momentum is continuing and through the desired direction. So if you have a look here, here's a crossover, and as you can see, as the MACD line starts increasing its value, it's the distance between these two lines increases. As the distance gets more and more prevalent, you'll see the price sporadically move up higher. When you've got sort of a choppy action, you'll get the MACD and the EMA line really just confluencing, just basically twisting in and out. Sort of chop like this basically is no good for anyone. It's just literally chopping in and out. I mean, bear in mind this is a daily chart. You can use the MACD 5-minute, 1-minute scalping if you want to. But again, if you notice here, we've got a significant crossover here, just above the 0 line. This is one of the most powerful sort of crosses you'll see, because as the MACD crosses below the moving average, both of these are now dipping below the 0 line, which is a key line. And also, if you noticed, the histograms have started to print below the 0 line. If you look at the price action above, notice how the price action now, the markets are moving down. So when the MACD is below the 0 line and you've got a clear crossover, you've literally got a good scenario where you can be selling these markets, vice versa on the upside. Right, I'm going to show you how to use a 0 line here. So this I thought was a very useful chart. So if you look at the 0 line here, every time there's a crossover, the histograms basically conjoin and there's basically no difference between the two lines here. But you notice the reason why this is red, green is where there has been a turn in the markets. So if you just forget about the price action for a minute, but look at where these are actually crossing over. So for those of you can clearly see that the black line here is the MACD line and the red line is the signal line. Basically here is a moving average line. So every time we've crossed over, every time the MACD has crossed above the moving average, with basically where the market price is moving up here. So you could be buying at these levels here. Just to confirm that, the histograms are also printing positive above the 0 line. So there's 2 or 3 different scenarios you can be looking at. It certainly is more powerful to be buying when there's a crossover above the signal line, above the 0 line. Likewise, if you're selling below the 0 line, it's a lot more of a powerful indicator. But you have to bear in mind, this is not a crystal ball. This is a lagging indicator. So it will go through. It will go through as the price movement goes. So if you look at here again, we've had the MACD moving below the signal line here again, the moving average line. So once we've crossed over, price action starts to move down. So although you're not going to get exactly at that crossover, it will give you a chance. As soon as you know the MACD started to move down, it will give you a chance to sell the market around these areas where it can give you possibly some good. I'll get onto some of the pros and cons of the MACD a bit later, but the whole point of it is, let's have a look at, this is the biggest move here. I mean, ideally, you possibly won't be selling here, let's face it, but you'll see this price action is going to be moving down at a hell of a rate of knots. But as soon as we move down here, anywhere down here is safe to sell, because the MACD line is basically moving far away from the actual moving average. So even if you sell anywhere down here, you've got a very decent chance this market's going to be moving down. And again, likewise here, once we've done all the damage on the downside, you've seen the MACD line started to cross back above. So once we started to move back above, and once the histograms have started to move back above the zero line, price action starts increasing. You know what? It actually does seem very simple if you look at it on the face of it. Although technically it may look a very complicated indicator. All we're looking at here is crossovers generally. I mean, crossovers generally are the most popular use of MACDs. Sell signals and buy signals are generally taken by traders on crossovers. I mean, you wouldn't just use a MACD by itself. You'd basically use it to confirm maybe an overbought or an oversold market. This is one thing a MACD will not give you. A lot of people do confuse a MACD with oversold and overbought markets. MACDs do not tell you when the market is oversold or overbought. Things like RSIs and stochastics are the sort of indicators that give you that. So this, along with maybe an RSI or a stochastic, can really help you in the sense that the RSI and the stochastic will tell you when something's oversold here. Just because the MACD is down here, that doesn't mean it's oversold. All it means is momentum is slowing. And as momentum starts increasing, the crossover occurs. And as that momentum starts, I mean, that point itself could be a buy area in itself. But you would then, look at it with the RSI. Is the RSI started to move back up? Has the element of the stochastic started to move back above the sort of the sell line? So three of these indicators work very well together, actually. So if I move over to the next one here, a classic bull signal, just to show you here. So here we've got the MACD at the bottom here, and as soon as we cross over, again, this zero line is very, very key. A lot of people forget that, but as soon as we get that zero, as soon as we get that, I mean, if you think about it here, the market price is hardly doing anything, hence the reason the histograms, when we see the histograms doing this, we don't really want to be involved in the market. It's something you don't want to be involved in. But as soon as we see a bit of a crossover here, especially here, if we look at this crossover here for this example, there, the histograms start increasing and the MACD line tears away above the EMA. As soon as we start buying the market, you'd probably get in just after this spike here. You can safely buy the market. And you know what? If this MACD starts moving back down again, that may be an area where momentum is starting to shift again. You can exit that trade. Hopefully that's fairly clear to you. It's a pretty simple sort of a scenario there of when to get into a trade and when to get out of that trade. You can also use MACD as a divergence. So positive divergence here is between MACD and the price rises when the moving average divergence begins to advance and making higher highs. So as you can see here, the price is making higher highs, but the MACD is actually making a lower low. So the MACD is actually not playing the same ball game as the price there. What that basically means is a negative divergence here. That basically is telling you that this price here, although we've created a higher high, the MACD has gone down. The momentum of this upward move is softening and it's actually becoming weaker. And it's then, obviously, as you can see here, it's cracked. The price has finally cracked and starts moving down. But these divergences, again, are very, very important for those of you who want to know, how powerful a particular market is. How powerful is a downward momentum? I mean, look at the markets this morning. I mean, for the last 24, 48 hours, you got the global indexes crumbling in front of your eyes. I'm gonna try to go onto the DAX chart. and some of these other charts in a minute. But divergence is what it's all about. You know when a market is weakening. If a market's been on a bull run, the key, I mean, no one's got a crystal ball, but what you can know is, is that market weakening? It's still going up, but is it weakening? If I move over to the other slide, it's basically the direct opposite. Again, the price is making lower lows here. It's lower, it's making lower. As we've been seeing this morning, it's been coming up, doing a bear flag, coming back down, another bear flag, down, up, again. What I mean, we might be making lower lows here, but what the MACD is telling us is this downward move is actually becoming weaker, because look at the divergence. The MACD, the histograms are showing us that, you know what, it's actually, although it is down, but it's actually coming down less now. So this is an area, you know, that you can prepare yourself to start getting long the market, especially if it's coming down. You know, okay, although it's coming down, I know I should be looking to buy here fairly soon. And as you can see here, we've got a zero MACD here, a zero line here where the crossover occurs, and we've got the histogram started to print above the zero line, and we've got a crossover. So with the MACD, it crosses over. There, potentially you could start buying, and as the price starts moving up, we've got a clear signal to potentially buy the market. Some of the advantages and disadvantages I want to sort of conclude on before I go on to some live charts. Advantages, again, it's a solid indicator and it helps to identify trends. Also, it provides a signal much before an average crossover. So a lot of people have moving averages that are plotted amongst the pricing here. What you'll find is the MACD will move a lot faster than any of these moving averages up here. So that's why a lot of these traders like to use the MACD as a sort of as a leading indicator, as some sort of indicator to tell you when momentum has changed, rather than using moving averages that are just, you know, hugging the price. What the MACD is telling you is, you know, the market's falling, but it's falling by a slower rate of knots. This convergence, this divergence has started to move up now. So we've got that crossover. These crossovers are what is going to get you on the right side of the trade, ultimately. Some of the disadvantages, some of the negatives, again, it's a lagging indicator. It will always give you the signal after the trend has started. So, for example, here, that crossover, most of you will see that crossover and think, great, let's jump on it. But that's already started. The move up has already started, yeah? It's a lagging indicator. What it won't give you all the trade, but it will get you on the right side of the trade. So you know what? You might have lost some of the meaty side of the trade, but you can carry on following that going up. So it will work with you as you're moving up. So that's one of the things you need to be careful of. And in a volatile market, you do need to be careful, especially the sort of market we've been seeing currently. What the MACD can do, especially those of you who like to look at 5, 15-minute charts, it can give you wrong sort of signals, if you know what I mean. So it can snake around too much is what I'm guessing. But you know, I guess that depends on the type of trading you're doing. If you're scalping, if you're only looking for 4 or 5 pips, I guess that can work. But obviously, as I always say with all my webinars, longer term charting will always be a lot more standard, a lot more solid in terms of its momentum and showing you what you're doing. You know, I appreciate most of you guys here. We've got over 40 people here today. Not all of you are going to be scalpers. There'll be people here who are day trading, end of day, or just looking at 4-hour charts. Those of you guys who are doing that, obviously you're not going to be jumping in and out of trades, but the scenario works exactly the same. As the crossovers tie in, you take the trade on as soon as a crossover has been developed. What I'm going to do now is show you some live charts. Just move over my platform. Right, okay, so this is the ETX Trader Pro. I'm going to go through the platform very, very quickly after this. But let me just go through. Let me have a. Well, let's just say. I mean, it's the German DAX is the one that's really been moving, folks. This is the one that's really. I mean, a few weeks ago, this was standing at 10,000. It's basically given off nearly 1,000, just over 1,000 points in the last few weeks. So certainly been moving here. Right, let's get this chart on here. We've got a 10-minute chart. Let's move that to an hour. And studies, I mean, like with most of the other indicators, MACD is a pretty standard one in most brokerage houses. But the one at ETX here is actually a really, really good one. You might want to check this out because it gives you a bit of an opportunity. If you only want the lines and you don't want to worry about the histograms, it gives you a chance to just have the lines or just have the histograms, as you can see there, or you can have both. So you got an element of sort of, you can actually chop and change of how you want to. MACD line's black here, which I don't like. So let's change the color on that. We'll change it to blue, I think. Right, close. And we'll make this slightly bigger. Right, let's go to more of a daily chart here. Wow. See what I mean about the DAX? Well, it's interesting points here, if you can see this. Right, we've had, for those of you who are long-term traders, this is for you basically. If you look at the DAX here, the DAX has been climbing and climbing, but you notice here, let me get my vertical line here. This is the point of where the MACD, the blue line, has moved below the moving average. That is the point. If we put a line here, there, where the price action is, right, as you can see, there's not much really. I mean, the DAX and a lot of these markets throughout June and July have basically been moving sideways. But the MACD is already telling you that this upward move that we've been seeing, if we scroll down, this massive upward bear move we've been seeing has been slowing down, and this was a period where it really did cross over. Let me tell you, what was that? That was actually the 11th of June. Wow, that was a month or so ago. The 11th of June, this market was slowing down and going up. I'm not saying necessarily you were looking to sell this market then, but you know by looking at the MACD that this market was slowing down. The MACD, although the MACD had been going low, you could have been basically trading these little dips. But if you look at the MACD trying to claw its way back above here, and this is a key point here on the DAX. See, just if I can move that along, it won't let me. If you look at, let me try to make that slightly bigger. Do you see there how the MACD tries to claw its way back up, but it fails? Let me try to make that a bit more clearer. And if I put my vertical lines where that crossover is, so here, start of July we're talking here. So the MACD tried to claw its way back above, but it failed. It started to push back down again, and especially with these histograms printing new lows below the zero. Anywhere above here, you were safe to sell. And of course, since then, I mean, you're talking, what, a 10,000 point area here. We're now sitting at 9,000. But I'm trying to explain to you guys here just how powerful this crossover has been. I mean, obviously, ask me questions, and I know most of you are probably sitting and looking at this, but just look at how the MACD failed to cross over here. I mean, had you sold the DAX here and just left it, you don't need to be looking at this market. You're basically looking at a 1,000-point move here. Look where we are there. Although we've been chopping and changing, the momentum has always been down. So this is a long-term look at how the Dow has developed. Let's flip it. Let's look at more sort of short-term trading. I know most of you guys don't, basically are day traders. So if we delete these lines, and if we look at this from a sort of a on a longer term basis, well, that was a day chart. What can we look at? Let's have a look at, say, 15 minute. Wow, that's a bit. I mean, 15 minute. Okay, let's have a look. The last 15 minutes, we've had a little bit of a bounce here. Right, again, look at it here. So we've had a crossover here. What that's telling me here is 15 minutes. Let's plot some of these vertical lines. On the ETX platform, actually, this is one thing that's very good. You can plot these vertical lines, which certainly does help you when sort of analyzing what these markets are doing. So let me just plot one here now. Right, look at this vertical line where I've just put it. That was a crossover point. This is where, I mean, we had a big drastic move down on the DAX. This is where we start printing, we start seeing some green histograms. Although the price action is very much choppy and sideways, this is 8:30 this morning. You know, we've had a drop since then as well. What it is giving you, it's giving you divergence. Look at the divergence here. Let me have a look at, let's get this here. Look at the divergence here. Although the price is moving down, the divergence is actually moving up. So what that's telling me is this move down is slowing now. I need to be careful about selling this market. Do you understand what, does that come across very clear to all of you? Just say yes or no. Because what it is here is, if you look at this, the price is actually moving down, but the divergence of the MACD is moving up. And if you have a look at this crossover, it finally crosses over here. So if you look at the crossover here, it finally crosses over here. And if you look at the price pattern here, oops, let me just put that in. So have a look at that. Yeah, so I mean, it's moving down. We've even had this point here is telling me that the divergence of this moving average is actually going up now. This market should be slowing down fairly soon, although we're still coming down here, we're coming down there, we've come down here. What it's telling me is sooner or later in the next 15-20 minutes, this market's starting to head up. And lo and behold, when we have a crossover up here, the market shoots up. In fact, look at it. We were printing around about 89.20. We've gone up 89.50. We've gone up over 60 points up here. So you could have been buying. Look at the MACD flying above the the actual the moving at the EMA here. Perfect buy scenario if you're day trading. So hopefully that sort of makes sense to you guys. These crossovers are there for you to take on the trades, and you know, use a divergence here as well. The divergence is very important. So hopefully that sort of makes sense to you. What I'm going to do now is actually move away from obviously the charting and everything. I'm going to quickly show you why. Mr. Smithson, you've asked you why not enter on the crossover. The reason is you want a bit of confirmation on that. If you think about it, had I entered the trade here, look how it's just moved back down again. You know what? If you're this is a 15-minute chart, so don't confuse the 15-minute chart by the chart I was looking at earlier. That was a daily chart. The 15-minute chart is going to give you far more crossovers than the daily chart. Just appreciate that fact that the smaller time MACDs will give you a lot more crossovers. Hence, potentially it will give you a lot more false sort of signals. But the longer term ones will give you sort of more genuine ones. What I'm trying to point out here is, although the price of the DAX has been crumbling down all morning, have you seen that? Look where the DAX has been crumbling down all morning. The divergence of the MACD has been moving up. Do you notice that? Let me just put, let me try to get here then. Look how the price of the DAX has been moving down, but the divergence of the MACD has been telling me something else. What that's telling me here is, you know, although the market's moving down, it's going to slow down pretty soon. So this sort of divergence is giving you a clue. You know, this is not a crystal ball, but it is certainly giving you a clue that, you know what, hold your horses. We don't want to be selling this market anymore because there's going to be a breakout here. And lo and behold, if you see the crossover here, as soon as we cross over here is your chance of basically buying this market. And even if you buy anywhere around here, you've got yourself over 50 points. You know, we don't want to be greedy here, let's face it, even if we get 20 or 30 points. You know what, Mr. Smith, and you're asking, is short time frame better? Not necessarily. You can use divergence for longer term. It solely depends on your personal type of trader, what sort of trader you are basically, whether you're a short-term scalper, whether you're more long-term. Try not to mix both of them up. You can use the long-term time frames to confirm certain things on the short time, but you've made your mind up. You're a day trader, you're a scalper, or I'm sort of a more conservative long-term trader. Stick to one or the other. Try not to mix the two together is what I'm trying to say to you. But hopefully this example this morning is giving you, showing you what the MACD really is all about and how powerful it can be. Let me just have a look at the day chart. Let me see if that's, this is a completely live scenario here, so please appreciate this. So have a look at this, guys. I mean, we've collapsed here from 10,000 all the way to 9,000. The MACD is minus 200. The day term chart is not telling me anything. All it's telling me is there's no crossover here whatsoever. But that MACD, I mean, if you look at these histograms are important. These histograms potentially will start moving their way back up. Only then I will know this downward move potentially will start weakening. So that's the day chart. Let's have a look at the 4-hour chart. 4-hour chart, oh, lo and behold, we've already had a crossover here. 4-hour chart, we've already had that. On the daily chart, we haven't confirmed it, but on the 4-hour chart, we've suggested that this downward move is slowing. So let me just make this one last thing. I know we're probably sort of running over time here. Let me put this. Look at this divergence here again, and look at the divergence here. So hopefully that's fairly simple here. Oh, sorry, that's not right. There. Do you notice, look how the price is moving down, but the MACD momentum has started to move up. What that's telling me is this price move down is slowing down, and I can potentially, on the next sort of crossover, I can start buying this market. Had I bought on this crossover here, potentially I could have made about 30 to 40 pips on that already. Let me sort of make that bit bigger for you just to show you. So we've crossed over here. There was a crossover here. We've crossed over. We need to be thinking about buying the market anytime at this level here. And finally, we've moved over here. So momentum has shifted. Right, that concludes MACD. So what I want to show you now is just a bit about some of these charts. Let's close this chart down here. I'm going to sort of whiz through the platform. There's lots of you here who've not looked at the platform, not seen the platform. I'm going to show you a bit of a one-to-one on this platform, and then I'll go on to the special offer that we're currently running for some of our clients. Very basic. You can have your own watch list here. Zane, here's my colleague Zane. He's got his own watch list. Let's go to Zane's watch list. Well, he's got nothing in there. Well, that's good. There's BJ's watch list. Let's go to watch list again. What I can do is populate this particular watch list by simply clicking on this first tab here. So I can say if I'm only going to be trading some of the indexes, so I'll put the DAX into Zane's watch list, and I'll put the UK FTSE here. I've already put the FTSE here, and let's put the Dow here, the S&P and the Dow. So if I move over to Zane's watch list here now, there we go, there's all 4 markets. What I can do is have a one-click trade facility here. So I can essentially click this, I can get into the markets at one click very quickly. So I can put a default here on all these different markets here, whether I'm trading £2 a point, £1 a point, 50p a point, or £1 a point. I can basically get into the markets at one click. Oh, apart from that Dow, there we go, we're into that Dow. So you notice how quickly I've got into it. Again, notice, and just the same, I've bought all these markets. For those of you who love scalping, I can get out just as quickly. So hopefully that gives you sort of quick scalpers, just to tell you how quickly you can get out. Okay, that German market, I'm still in that. Let me close that out. There we go. I've closed that one out. So that's your quick one-click trading. To set up your stop loss, again, very simple. We'll pick on the DAX here because we've been looking at it all day long. If I click on the advanced chart, the advanced tab here, should I say, I can now determine a stop and a limit. So, for example, I'm doing £1 a point. I can say I want to put a 20-point stop loss, and I want to put, I don't know, a 15-point limit. There we go, simple as that. I'm in the market very quickly. This platform, the reason why we're pushing this platform is we feel it's actually very simple in the way you can trade it, and it allows you to trade all the way down to 50p a point, which for those of you who don't want to take a lot of risk is very, very good. And the charting, which I showed you earlier, it allows you to trade off the chart also. So there, if you look at the chart there, you notice I can actually trade off the chart here. So £10 a point on the DAX. I can have the MACD again showing here. This is the sort of setup I've got, admittedly. Let's have a look. Let's get both of these up here. And those of you who are scalping the markets, I can do this as I'm in the market myself. So there we have it. So as soon as that's a 10-minute chart. Let's make it even smaller. There's a 5-minute chart. As soon as that crosses over, you know, I have £10 a point, I'll be looking to close that. I'll be looking to sell that very quickly. So those of you who want to use this as we can do, Richard, let me show you how to do the existing trade. So I've got an existing trade here. Let me close this trade off. Say, for example, I've just gone and bought the DAX here. So I've gone here and I've bought £10 a point on the DAX. There, no stop loss on. If I want to put a stop loss on, all I need to do is click on the plus button here on the left-hand side, and then move over to the order button. I can now attach a stop and a limit to this particular. I can either put it in point value term or the actual level itself. So all I need to do is put, say, 25-point stop, 25-point limit, making sure I put a minus because I've actually bought the market, making sure I put a minus in front of that and amend that. I can quite simply, and to see that, if I click onto order book, there's my sell, my stop and limit here. I can amend these at any time or cancel these at any time. If you do want a one-to-one on this platform, by certainly get in touch with me. Like I said, this platform, we've got a 0.7 on the euro dollar, we've got 1 point on the Dow, 1 point on the euro, on the Dow, on the FTSE, one click execution. And what's more important here is we've got an offer. We've got an iPad offer that's going to be running until the end of August 31st. What basically you have to do is trade a certain amount. So if you can trade £800 stake, the offer is basically for 1 month. What we're doing now is we're expanding that offer to 3 months. So we're giving you ample time to trade up to £800 a point. So I could be doing £1 a point, 50p a point, £5 a point, £20 a point, whatever. As long as all these stakes amount to £800 over 3 months, I personally will be posting you an iPad mini. That's not bad, is it? Not many people do that. It's an offer that's very achievable. You've got 3 months to do it. And you know what? If you need a bit more longer, I'll give you a bit more longer. Just email me directly This is my email address and my Skype. And those of you who want to open up an account, who haven't got an account, and want to go for this iPad offer, you know, I'm more than happy to do that for you. You know, it's a nice little present for your grandkids or your kids or your wife or your husband or boyfriend or whatever. And, you know, you're going to be trading anyway, so I'll give you ample time to get up to that. If you've got 3 months, that's ample time. You know, stakes do accumulate very quickly. But, you know, here are my contact details. If you need any more help from me as regards the platform, get in touch with me. I'm more than happy to go for the one-to-one. Hopefully, I've sort of educated you guys on the nature of the MACD. Hopefully you've picked up a few points, and those of you, you know, who want to open an account or want to ask me any further questions, feel free to email me directly. I'll be more than happy to set anything up for you. And with that, I wish you a very, very happy Friday and a nice weekend, and we will be doing another educational sort of indicator type webinar in the next coming week. So it'll be good to be seeing you. Thank you very much, John. I'm having some really nice compliments here. Thank you very much for the nice compliments. My head's not going to fit out the door now. So, but thank you very much. Much appreciated. And we'll speak very, very soon. So take care. Bye-bye.